All right, welcome back after lunch. I hope everyone was able to find a co-founder for their edtech startup. If not, you can still check out the speed networking feature. But right now, let's focus on the afternoon session of FTX 2021 Day 1. Now, if you permit me to be slightly irreverent, I hosted last year's event as well. And last year, there was this giddy excitement about neobanking. General consensus seemed to be that we don't need banks with banks, we need banks without banks, we need neobanks. Banking is the future, and we will never look back. And just the title of this next panel shows you, in one sense, the effects of the passage of time. The next panel is called Neobanking. What's the real problem? So, will you please join me in welcoming on stage Sujith Narayanan, the co-founder and CEO of Money, Anuj Kacker, co-founder of Freo, Rajeev Ahuja, the head strategy, RBL Bank, and Shashank Mehta, GM and head, RazorpayX, Razorpay. Over to you guys.
Thank you. Thanks a lot.
Cheers.
Hi, everyone, and welcome to this panel discussion on neobanking. Over the last few years, we are seeing an increasing trend of fintechs getting into the banking services for a variety of customer segments. And there's a lot of attention on this space, particularly hope from this category, as Karan mentioned, right? Sometimes it looks like the neobanking is probably the answer to anything and everything. And that's what we're going to do today's panel with these set of folks that we have today. But before we get into neobanking itself, right, I think one quick call out that India already has a pretty strong banking infra. We have a pretty strong system with UPI for instant money transfer, Phone Pay, Google Pay. We have Zero the Grow for savings, investments, and whatnot, right? So a question which comes up quite often is, what are neobanking really solving for? And this is a question that probably will keep coming up until neobanks scale to millions of customers. I am very happy to have today a set of folks who are practicing in this space. Two companies that have built a product, are scaling it up, are already live and changing people's lives with their neobanking solution. And one person from the banking sector who has been actually spearheading a lot of these partnerships with different neobanks. So today we should get a real good view across the neobanks and the banks itself on a variety of topics. To get started, I think what I would first request is maybe Sujith, if you can run us through like an elevator pitch of Money, right? Like, what is Money solving? Why should I as a customer use Money?
Sounds good. Thank you so much. Delighted to be here. See, to a larger extent, I think we've looked at financial services, and from a consumer lens, financial services can be simplified into four simple things. I'd like to store money, which conventionally has been a bank account. I'd like to use and transact my money, which is the entire payments ecosystem that you see around you and that you refer to. I'd like to grow my money, for instance, which is the investing ecosystem, and I'd like to borrow money. The financial ecosystem, to a larger extent, we felt that there were leaps which had happened in the payment space. There were leaps that were happening, for instance, in the investing space. And over a period of time, we saw, the early signs of that happening on the lending side. And Anuj, I'm sure, would speak about that at length. The space where innovation to a certain extent was behind the curve was where people were storing money or how they were using the monies that they were storing, for instance, right? To a larger extent, going to be slightly direct out here. Bank accounts for the longest period of time seemed like a digital piggy bank, and it needed to evolve across the board. So for a young user or a millennial, the idea was that could you get a banking experience, for instance, which was more conducive, spoke your language, not only just from a UI or a UX aspect, but allowed you to meet your goals, right? So if you're a 25-year-old, for instance, your perception of how to deal with money, what to deal with, how to use money, where to invest, that needed solving. And that's vastly different from somebody, let's say, in their 40s. That was the thesis, and that's essentially what we've been trying to look at.
Got it. So what you're saying essentially is that neobanks are looking at the relationship with money beyond just the storage part, right? Beyond just it being like the piggy bank where I keep my money, and changing from that into a relationship aspect, right? And at that point, I also want to bring in Anuj from a Freo perspective, right? I think you folks have been doing a lot with MoneyTap as a brand on the lending side, and now are entering the neobanking space, right? Maybe we can talk about the elevator pitch for Freo, and also light on why are you going from lending to banking? What is the thinking behind this?
Sure, and thanks for having me here. It's great to be with Rajeev and Sujith on the same panel. So thank you for that. Uh, Listen, when we started about 5 years ago, this concept of neobank, did not exist, right? I mean, they were, across the globe, they were called digi banks or neobanks, and lots of other words were there. But in India, it was just, conversations were just starting. And like Sujit pointed out, it's a great framework, and we use a very similar framework that the four pillars are there. So you can't be everything to everybody on day one, and everybody needs to find their wedge, if you will, or hook, if you will. And we started by saying that, hey, we will solve the credit problem first, and we will try and do better at that. Of course, we partnered with banks and NBFCs at the back. While we have our own NBFC license as well, but we our our our, our strength is in how we partner with banks and other financial institutions. But as you evolve, you realize that people today are not looking to say that I just want one transactional relationship with my financial provider, and I'm consciously using the word financial service provider, not a bank, or I'm not putting a label on it today. And I think that if you move past these labels and you want somebody to be beyond just a transactional provider of money in my customer's life or money in my life as a customer, and we realize that we cannot only solve for just being a credit provider. We need to play in those four buckets that Sujit pointed out. We are there in about three of them. We do something on the payment slash pay later side. We have obviously have credit. We have now the storage of value. We've not done anything on the investment and growing your part as yet, and maybe that will come in the future. Who knows what that roadmap will look like? And we realize that uh, it is important to sort of evolve as a brand, as a product for our customers, because the needs of the customer are also evolving. And the guy who wants credit today may want a payment solution tomorrow, may need a buy now pay later solution day after tomorrow, may need a better banking experience the week after. And today the guy is going to various different providers. So he may have a credit card with company A bank account with company B, a home loan with company C. And that to us was something that is the only reason why this happens, is because as a single service provider, you are, or a product provider, you're not able to solve for all the needs that the customer wants on the spot. And that's the reason why we moved from being only a credit provider for the past 5 years under the brand called MoneyTap, where we are now foraying into the neobanking space under Freo, wherein we will be able to provide all these things to our customers. And what we internally or even externally now call ourselves the credit-led neobank, wherein over a period of time we'll be able to solve for a customer's financial graph, if you will. So because we have all this data of this customer and transaction behavior, etc., I'm able to solve for customers, creating a financial score over a period of time, looking at all these products, and then being able to offer whatever he or she needs at that point in their life. And that's the reason why Freo came about, and that's our journey so far.
There's a lot to, I think, unpack in both of these elevator pitches. I think there's a lot that's happening, and all the framework in itself, I think, is very powerful. I was thinking about this, but before I get into some of the questions on that line, Rajiv, would love to kind of understand from your perspective. You've been partnering with the fintechs on the API banking layer across the stack over many years, right? RBL has been at the forefront of innovation on this side, and naturally, that gives you like a very strong view into what's happening in the ecosystem. What can you run us through in terms of what are the different kind of partnerships that you're doing around neobanking, and maybe what are the different kind of customer segments that some of these neobanks are looking to tackle? And how do you think about some of these partnerships itself when you get into a partnership with the likes of someone like a Freo or a Fi Money? What goes on the bank side?
So thanks, Shashank, and I think having spent nearly 7 years working with several people like yourselves, including Anuj in MoneyTap. It was one of our first partnerships on credit cards, and with you on RazorpayX. I think our thesis were very simple. As a mid-sized bank trying to come into banking, we're not going to be able to understand and configure around emerging customer segments, which actually are pulling away from a very monolithic approach to financial services, which all of us have had for decades, because there was a supply issue. Demand was always there, but the suppliers were of all one type. Similar technology, similar product thinking. And actually, most of the time it was, this is my product and this is how I'll do it. and that's how life went on. But I think our partnership via API banking in many areas got us a sense of how the customers are now, with the more empowerment and public platforms like UPI and now account aggregator, are bundling and unbundling themselves. And which is why, if you look at Sujith and Anuj, the way they talk about, each of them is starting from a different point of position, but want to ultimately build the financial graph, as Anuj calls, for the customer. And that's an earned trust over a period of time, whichever point you start from. So I think banks have typically not built themselves around customer journeys still recently. I mean, I'm not saying all of us are pretty much of the old variety, and actually have now started understanding that with more empowerment, customers are able to combine and recombine services across multiple providers. So pretty much if you look at the micropayments revolution, is gone away from banks. I mean, you have now 4 dominant providers, and pretty much they all use bank accounts, but the name or the mind share is of these 4 UPI wrappers. And I think in some ways that is a destiny many of the banks would probably face over the next 5-10 years if they don't innovate. And I would say not innovate just around technology, because technology is perhaps complex, but it's the easier one to innovate. But it's also about reconfiguring your internal, product functions to look more outside in. And that's a big jump. And all of us are now doing it. So it's not like we understood very, very well through our vicarious ringside view of what Anuj is doing, Sujith is doing, you guys are doing. And I think as RBL Bank, we're very clear that we won't be able to be all things to all people. So we're very happy to be a back-end provider. So in payments, we pretty much power many payments as a banking infrastructure. We have no aspirations to get to the customer end, because it's not something we can digest, and we probably don't have a segment strategy. In a merchant acquiring where we have a kind of the top 5 position, we've decided that this is not a segment we can deal with, because it needs a very different DNA and feet on street, which we are not able to equip. And perhaps we'll empower the M-Swipes and Pine Labs and ITSLs, etc. of the world to do this. And then I think in the B2B space, Shashank, as you know, we have a deep partnership with you. And the idea is, again, understanding of businesses, small businesses, especially digital first businesses, is more of a recent origin. And, as a bank, we don't have all the resources and the time to address everything. Consumer side, actually, we've chosen a different approach. We started looking at credit cards because that was a unique, platform. And I think 2014, when we started doing our first with Book My Show and then with Anuj and MoneyTap, and that's become a large partnership. So 80-90% of our business on cards is driven by partnerships. Obviously, Bajaj Finance is the largest now. So I think what I'd like to state is that as the consumer makes more explicit choices and has the power now to no longer get, be the hostage of one provider. Therefore, your internals have to be a lot more flexible, lot more agile, along with technology. And I think that's where I see banks having to make adjustments to, which we are doing. And secondly, I think, and I want to pose this question maybe for the next round, we have our own problems to solve and solutions to build. The thing I want to just pose is that for many neobanks, and I want to be a little provocative, neobank is not a new concept. Frankly, if you just peel away what Anuj and Sujith are talking about, it's a new appellation to what started off 7 years ago as a wallet, merchant acquiring, online acquiring, credit lending. And now you're trying to combine that in what's called a neobanking, but you're still using a bank's rails. Perhaps in 3 years' time, you'll get your own bank rails. What do you do when you grow up what do you want to become, and how do you look at the economics of your business eventually. So the competition is not between banks and neobanks or fintechs. There are enough good banks, much bigger than us, but there are enough neobank aspirants. So every time I talk to somebody in the brokerage space, like Anuj wants to go from credit to neobank, they want to go from brokerage to neobank, they want to go from a payment to a neobank. So maybe there's 15, 20 of you well-funded startups or more established players who all want to build a neobank. And the payment bank as a concept hasn't really fully delivered on. They're delivered on scale, but not on economics. So I think these are very real things. So I get less worried about what is on today. I know we have a path. We are very clear on partnership as the core of RBL, because I think the customer is making those choices very clearly. We should not aim to become the be-all, end-all. But I think more from people like Sujith and Anuj and many others, what happens in 3 years' time when you've got scale? You have your own NBFC, you're doing insurance distribution, you're doing investment distribution, you have a nice financial graph, which I guess if you talk to the larger payment wrappers today, they also want to go there. What happens to your business model? And so it's 15, 20 neobank aspirants and maybe 10, 15 private banks and a few PSU banks. And where are the profit pools? So I just want to leave it there, because often the discussion in neobanking is about technology, UI, UX, important. But what does it mean 3 years from now? And where do you chart your trajectory? Because ultimately, things do levelize and normalize. So I'll pause here, Shashank.
Thanks a lot, Rajiv. I think you make a great point, right, in terms of the revenue models, the business models, and where this will go in 3 years, right? And I think for a lot of folks, there's a lot of tea leaves reading kind of a thing happening, and for a lot of folks, there's some kind of a thought in their mind, right? And before I get into maybe the regulations plus the money making aspects, right, I actually want to kind of take a cue from what you talked about, right? The bundling and unbundling, and I think that's a sense that came out from Anuj and Sujith's answer also, that the storage of money, the transactions of money, the growing your money, and then borrowing, right? The 4 facets of money that come into picture. I actually want to ask this question maybe to Sujith, right? That in the market like what we have right now, there are enough applications. Like I can use Zerodha for my trading. I can use Grow for simplified mutual funds if I want to. I can actually use my GPay app for transactions, right? I'm probably spoiled for choice even in today's market. Can you help us understand why do you think that this bundling is even important, and why can it not that be okay? My storage of money is just a piggy bank. Actually, let it be on the background. Let me use my Zerodha account for trading and my Google Pay for transactions. Why does it even need to come in? What's the thinking behind that when you're saying that this unbundling needs to come back to some kind of a bundling maybe?
No, it's a fair point, Shashank. So I think you're looking at bundling from a native super app perspective. I mean, I would challenge and say that there isn't a need for the bundling to happen by the same entity. If you can look at it from a customer centricity perspective and say that I will pick and choose the best player out there, not necessarily somebody who is a part of my parent company or shares the same investors, for instance, but I will actually pick and choose. So maybe yes, for trading, maybe it could be Upstocks, maybe it could be Zerodha, for instance, but that is the best experience which is available out there. Now let's pause here for a moment, right? Like let's look at it as to what's leading to the emergence of neobanks across the world. And I think there's a point that I'd like to draw in from there. Globally, if you see this trend, right, it's been driven by 4 factors. One, technology has leapfrogged, right? So whether you look at UPI, PSD2, open banking, for instance, emerging, has allowed for a new category of fintechs, technology companies to enter into a space which otherwise was a protected turf of, let's say, financial institutions, right? So that's been the lowering of barriers for people to come into this world of money. So tech on one side. Second, I think consumer preferences, right? Conventionally, if you actually look at it, today's banking or money to a larger extent would have always led to trust issues with people not choosing, for instance, to use app or third-party payment providers to do anything with money. So consumer preferences have changed, right? Like earlier, you would, for any problem with a financial institution, implicitly you would decide that it would need to be solved at a branch, for instance. That's changed. Consumers, in fact, the only good thing I think that's come through the pandemic is the simple fact that all of us have become extraordinarily comfortable in dealing with all institutions, whether financial or otherwise, in a remote environment, right? And that's, I think, the culmination of our comfort level. We've always believed that money wouldn't go digital to a larger extent. Payments would, but everything beyond it wouldn't. That's actually changed. So consumer preferences have changed. That's the second factor. The third factor is that you no longer have to be one size fits all. Profitable niche targeting, right? This is something that you can go behind and say that there is a certain category which is now large enough for a financial institution or a tech or a fintech to actually focus in. You do not have to think in as a horizontal saying that I will appeal to all consumer segments or I will appeal to all consumer profiles. That's grown larger. And over the next 10 years, as our per capita income grows, you'll suddenly find that you could pursue a profitable strategy of only focusing on a certain segment. And the fourth element, which I think is extremely important, is the data footprint. Think about 15 years ago, you'd walk into a branch and a branch manager or somebody would say, or even a relationship manager would say, tell me more, right? Like, what's your income? Where do you work? Are you married? What are your preferences, right? What fixed assets do you have? That has got replaced today with the data footprint all of us can provide at a click of a button, which means that your ability to surface something highly personalized, right, at a unit of one allows you to unlock value pools or revenue pools. So four factors: tech, the opening up of tech, change in consumer preferences, right, large niche profit pools which could open up, and your ability to personalize or to provide at a unit of one because of data. Now, four of these things coming together, I'm also answering Rajiv's question out here. What essentially happens is, I think even if tomorrow licenses do come into play, the choice of your go to market or your segment that you will then decide to build out a slightly profitable, business would be very, very different from the playbooks that we've seen in the past. So no longer, I think, is the strategy saying that I will appeal to everyone. You can do that in payments, right, where you can create a payment solution, for instance, that appeals to everyone. But when you're going behind, let's say, investing, lending, or let's say, the storage of money, you'll have to be very clear about the segment. And that's true globally. Globally, challenger banks or neobanks have never gone to the market saying, I want to be the next HDFC, or I want to be the next ICICI, or I want to be the next Chase, for instance, right? There are only three segments that challenger banks or neobanks have focused in any part of the world. They've either gone behind the unbanked or the underbanked, right? Blue collar segments, subprime to an extent. They've gone behind SMEs and businesses, early startups, mid-sized corporates, for instance, to be able to offer an offering, just like what RazorpayX is. Or they've gone behind, to a certain extent, millennials, Gen Z. So from a consumer targeting perspective, these are segments that they've gone. What you lead with could be different. You could lead with an investment approach, you could lead with a credit approach, you could lead with a payment approach, right? That becomes your product choice to a certain extent. If you actually now think about these elements or these strategic pieces falling in place, you get a sense of how this could actually evolve over a period of time. And yes, this is in conjunction with existing banks. That also allows for certain banks to be competitive and get a share of wallet, a slice of the of the market in spaces that they're naturally not very, very competitive.
Shashank, and I think, yeah, that gives a lot of sense, right? And I think the crux of the matter, apart from the factors of preferences changing, I think the key part that you're mentioning is that banks and neobanks are not going to go head on and say that, okay, you've got these, 100 types of customers. I'm going to go after all those 100 types of customers, right? You're talking about that niche, profitable pool of segment that might appeal to different kind of neobanks. Just probably why we're also seeing that, there are some neobanks coming in which are just focusing on maybe the students going abroad. That's one category of customers that they're going after, right? And that brings me to a question, Sujit, maybe for you itself, right? In terms of for Fi Money, right? How have you gone about defining your customer segment, and how have you looked at who's the right customer and ideal customer for Fi Money, maybe?
So for us, as I said, right, three big categories. You either go to underbanked, you look at SMEs, for instance, or you look at the digitally active, digitally savvy, for instance, Gen Z millennials. That's the segment that we went behind. And our thought process was, after a lot of research and surveys that we had done into this spaces and having worked fairly closely in the payment space, our understanding was that this is a large segment. If you look at salaried employees in this country, that numbers around 60 million people, for instance, right? White collared people. The blue collared workforce is about 200 million people. Could you actually build out, for instance, a product suite which makes sense for that TG? Highly digitally savvy. The needs are slightly homogeneous over a period of time, and the needs to move into credit and allied areas or adjacencies, for instance, is something that grows, right? So you could start with a BNPL, you could start with, let's say, a credit card, you could start with smaller lending lines rather than going into, let's say, a home loan and products like that. What that allows us is that in that 0 to 5 years of our own growth as a company, for instance, it allows us to layer and build products, right? And that's why I said the strategy of what you then start building, because Shashank, the point is that 10 years from now, hypothetically, if fintechs end up becoming large financial behemoths, for instance, it allows you to build a scaled model where you haven't gone on day one with all products, but you've actually had time to build this out, for instance, starting from building blocks of certain elements that
Yep.
you want.
Yep.
And even there, the choice is we don't have to build everything ourselves. There are partnerships, exactly what Rajiv said, that a bank today would partner with fintechs to be able to provide a more complete range of either products or to be competitive in a certain space or to get a slice of the action. The similar thing could actually happen for fintechs as well, right? You could partner with other fintechs who have depth in a certain space, for instance. End of the day, if you can focus on that consumer experience and the centricity of what consumers want, I think that would then help unlocking value. Coming back, our core focus was this segment that we believed had drastically different needs and wants from an experience perspective, right? Today, a conventional bank, I could be 21 or I could be 61, for instance. My experience of digital banking or mobile banking would be one and the same. The product offerings to a certain extent would be similar. But if you can actually focus on that TG of users between 22 and, let's say, 32 or 35, then what products would actually be materially useful for them is the lens that we started looking at, and we said, this is the TG, and let's start building out a product for this specific consumer segment.
Sounds good. I'm going to take the same question, Anuj, to you, right, in terms of the customer segments that you're serving. And I think what I've interestingly seen, right, with MoneyTap and with Freo, particularly, is the fact that you've already gone from an unbundled to bundling kind of an approach, right? You've had like set of applications, and now you're kind of bringing it together into the Freo, the brand, right? Maybe if you can shed some light in terms of the customer segment that you want to go after, and what is it right now in terms of pain points that you're looking to solve for them? As you just mentioned, right, that with this segment that you have, you might want to build something you already have and you're bringing it together. Maybe if you can probably help us understand that from a Freo's perspective.
Sure. Shashank, I think for us, the customer segment as a neobank is probably similar to what we've been doing for the last 5-6 years, whether under the credit umbrella of MoneyTap, right? Like Sujith mentioned that there are broadly these three segments that he spoke about. Well, I probably add a fourth layer on top of that, which is maybe the top 5% of the people, which is where the credit card industry is. So maybe that's the fourth one that I will add to what Sujith mentioned. And that is not the segment that we want to go after, because there are already some 50 million credit cards in our 60 million credit cards now and growing. But it's that population is well served for folks like us on this panel as well and everybody else. But it's the next 200-300 million people who are in the middle income group, the guys who earn, say, 30,000, 40,000, 50,000 rupees per month. And I'm not talking only about the young kids, right? Even there are folks, for example, for us, now that we have 5-6 years of data, the average age or the median age is also in that 29 to 33 years of age. So it's not that I'm going after a 21-year-old guy who's 30 years of age earning maybe 50,000. Now you can figure out what kind of profile I'm talking about. So that's the middle class, real middle class of India. And that has been our focus all along. We know that the top of the pyramid is sort of well served, but the middle segment is not that well served. All right, and credit card is a great example or a proxy, if you will, because not everybody can get it, even though it's such a premium thing to show off a credit card, right? You will never show off a loan that I got a personal loan. Let me go tell my friend. That's not going to happen. But if I get a great looking black credit card, I'm definitely going to go tell my friend that I got a credit card, right? But that's been only given to 50, 30 million, 40 million people. And that is the next set of people that we are going after. And that for me is very, very focused. And it's worked well, at least over the last 5-6 years. And our banking products are also very specifically focused on that. And the need that we are solving for them is like I said, is very straightforward. All of us, we'll have a entry point, but I think the need that we uncovered from whatever customer research that we did, we said that if I can figure out a way that you will come to me and put, say, 25,000 bucks in my bank account, based on that, if I were to promise you that I'll give you maybe a secured card, over the next 3 months give you an unsecured card, over the next 8 months I'll give you a credit line, which is my flagship product, after that I'll give you something else, or maybe I start you off with a 3,000, 5,000 rupees, our buy now pay later BNPL product that we have, Freo pay later. If I were to give you that, would you put 20,000 bucks with us for 3 months? The answer came out yes, right? And that's where we focused on. I think experience and some of these things are table stakes. Some people will be better and some people will not be that good. I mean, that's part and parcel of the game. Beyond a point, I think the value will start mattering more than just pure experience. And I think everybody will try and ensure that the experience is great and so on and so forth. And this bundling, unbundling point, Shashank, that you mentioned, it's, if you just go back in history, you will see this cycle happening over and over across industries. First it gets unbundled, then it gets bundled, then it will get unbundled, then it gets bundled. It's going to happen all the time, right? And I think we're seeing that happen in the banking and financial services space. And and the other question that you asked, that why shouldn't we should just partner with whoever gives the best product, like Zerodha in the investment, for example, or Upstocks. Absolutely, we should do that. It's just that the visions don't align, and that's the reason why you don't do it. And that's why folks like Account Aggregator and etc., whose job is to ensure that I'm not going to be customer facing, but I'll give you that platform that everybody can do it. That's great, and that's the reason why it'll give us the bump. But if Zerodha were to say that, here are my open APIs, come one, come all, everybody wants to just plug it in, here are the APIs, I'm sure all the startups, new guys, will plug it in and give them the benefit of it. And I don't think that's a problem at all, for that matter. That's exactly what some of the banks are doing, right? Like RBL is a great example. They're saying that here are my APIs, here are what I will do. Let's partner together and see what we can do. And there's value to be built for both of us. And Rajiv talked about payment banks as well. I think one of the things that you'll see, and I hope that with this new paper that's come up and the licensing that we're talking about for digital banks, is the reason why I think the payment banks were not as successful as we envisioned it to be is because they were constrained of how they could make money. And we know how there are only a few areas that we can make money in this business. The rest of the time you're giving money to the customer. But there are only one or two avenues that you'll make money, and that got restricted, and that's the reason why it was not profitable for them, right? And I think that at least the white paper and whatever my conversations are, the regulators are, that they recognize this, and if they're solving for that, I think that if the 3 years later or 2 years later the licensing come, it will be a siege of change, and it'll be drastically different from what we've seen in the past. That's my a little bit of stargazing there, but that was my 2 cents.
Got it. So I think for you, just a quick question on this part, right? Is that are you actually seeing customers buy into the promise that, look, if I keep money at some point, I will get a unsecured credit line, which might happen in future, right? Because it's a promise. And do you think customers are able to kind of actually really capture this thinking and say, yes, I will create a relationship with Money Tap and Freo now?
Yeah, we're seeing that. And the reason why we're seeing that, Shashank, is that, again, it goes back to the segment I'm going after. If I were to come to you, Shashank, and say, please put your salary in my bank account and I will give you a credit card, you'll say, boss, yeah, look at, I have these 30 credit cards from every company possible, including some 5 loans. And who are you? Just, please stand behind the line. But the guy that I'm going after, he's not getting served, right? I mean, like I said, that if there are only 30, 40 million people with credit cards, what about the other next 200 million people? So the promise of being able to do better in their life, I want money for something, I want money for doing painting in my house, whatever it is that they want money for, right? If money is going to be that fungible thing that I need for, whether it is for storage or saving, whether it is for investments, or whether it is for credit to grow my business or grow my life in a better way, I will always need money in some form or the other. And if I can secure that and then provide you better access to capital by combining 2 products, why not? And I think that that's this insight that I think really works for us. Of course,
Got it.
3 years later, like Rajiv pointed out, we'll all be here and we'll debate whether it was successful or not. But as of right now, it seems to be working.
Got it. And Rajiv, would we, we've talked a lot about customer segments for Fi Money, for Freo and everything, right? Is there a possibility for us to see, like an RBL offering created specifically for, first time salaried folks just gotten into working class, right? Are you looking at maybe in the banking segment also, right? Creating some of these more sharper segments and then building for them? And how you think about that part? Because clearly neobanks are saying that's what we are going to do and how we will differentiate.
Yeah. So Shashank, both Anuj and Sujith and I picked up a couple of points, and I think they're very relevant. And which is why I was alluding to, it is not the technology, it is your internal thinking about how business should be done. And all of us in banks are conventional bankers selling products. Our P&Ls are by product, okay? Whereas Sujith and Anuj continue talking about customers and layers and layers. So I think we are all learning. Let me be honest. I don't think I would dare to say that we are even 30-40% of the way where Sujith and Anuj are. It's a business model and an internal challenge, because we all get it that 5-7 years ago a lot of things started breaking out into the financial services system, starting with payments, and pretty much banks lost the payments landscape totally, micro payments especially. And then I think the brokerage one has also been thing. So we have to start thinking, maybe not segment of one, which is really a longish journey for us, Sujit, but clearly segmentation and figuring out what works for us. I don't think I want to sit here and even think that I can be as agile as Sujit or Anuj are, because that's the only thing they work towards. I have an NRI segment, I have a kind of an HNI segment, I have a salaried segment, I have a mass segment, and I also do unbanked and underbanked. So as an organization, banks are quite complex. Now we are all changing and improving on this learning and how we organize ourselves. I mean, just so that we have a large branch banking business, which is client acquisition through branches and through our own kind of a neobank, which we have been kind of below the radar working for the last 4 years. I have a much larger credit card business, and my objective in the next 2 years is to build a common data and a user experience platform across the credit card and branch banking business. For us, it's a huge lift off. So, if you ask me, that's the priority. Now, in that, can I build a segment for salaried? Can I build a segment? And I think there we have to be very realistic that the pace and type of user experience, understanding and innovation, likes of you, Sujit and Anuj are doing, it is not something we can replicate across all segments. And then what is our deliverable to our investors and to the regulator and to the market? It's like, assets kitne hai, deposits kitne hai, PAT kitna hai, ROA kitna hai, and all of this gets subsumed. Whereas I'm sure Sujit and Anuj talk every day that how many customers, what is the learning as of yesterday, what is the cohort ABCDE telling, how do we change our service and product to address it. That's not the speed and the attention you can get in a bank. And let's acknowledge it, accept it, rather than keep beating our chest saying we'll get there. So we have to pick our spots where it makes sense, which is why I was very clear that there are 2 or 3 areas where we'll not compete with the established startups like offline merchant acquiring or B2B, which we work with you, Shashank. Cards is something we've now learned the business both in and out. So I'd say that this is something we'll all come to it, and maybe some of us will be successful from a segmentation perspective. My own money is on startups getting that better. And I think globally also, larger banks have tried this segmentation. They end up building a very clunky app. And then, somebody says, isme to sirf, 50,000 customer aa rahe hain, whereas we service 10 million. How do you build that attention? Whereas Sujith and Anuj will give that attention to the 50,000. So I think this is a prioritization issue, and recognizing that there are limitations on organizational size and internal complexities. In that, how do you do well? So I think we are obviously figuring out 2 or 3 things which we want to eventually become like FI and Freo, but it's a long road, and yet you have to solve more existential issues around COVID, around underbanked, unbanked. So when these guys become digital banks, I would love to understand how they manage their day-to-day, trade-offs in terms of where they dedicate resources. How do they measure themselves? Because life does change. But given that, I think there's enough we can do innovating ourselves, learning ourselves, and partnering. So quite clear that a bank of our size is not going to win the war by going and aping everything, but picking your 1 or 2 areas and improving, and then partnering wherever you think it makes sense. Now, I would love for Sujith and Anuj to build 500 or 5,000 branches and then manage the people complexity, which is a very different order. Okay, managing currency. So, each of us has our own strengths and relative advantages and disadvantages because the customer has choices. So within that, stretch the boundaries, do your duty, and wherever you can't do it yourself, reach out and figure out partnerships where you can create a better experience because you have a meeting of mind, which is what MoneyTap and us had 5 years ago, and I'm sure Sujith is doing that with their partner banks. So that's the way we see it. I think all I want to just leave on the table is that this is not a binary or a 0-1 situation. I think the market is being expanded by fintechs and neobanks and everybody, and banks also are learning and expanding at the same pace. I would still put the question down is that while you're expanding the market, where is the economic surplus being measured? I think a lot of it is going to the consumer, which is great. Then eventually it all boils down to what is the economics of your business. And therefore, the point is focus on a wedge where you can go and create scale, which is the most promising wedge for you, and then kind of layer more services so that you don't end up doing everything for everybody and not being a master of at least one segment.
Sounds good, I think, and thanks a lot for the candid response, right? I think how you're kind of looking at it. Let me now ask this question because, see, we've talked a lot about partnerships, and clearly the consensus in the room seems to also be the fact that, look, we'll partner. But at the same time, I think everyone's looking forward to the digital banking license, right? That seems to be coming out. As of right now, when there's a partnership between, let's say, a bank and a neobank, it's going great, right? Is a particular segment for this bank, which the bank was not able to, let's say, directly customize and optimize for. Whereas this partner, a neobank, is doing it and giving you business in that category, right? What happens when, let's say, the regulations come out, allows for digital banking license? What happens if, let's say, Sujith goes and applies for a banking license, the digital banking one gets it, and maybe no longer needs to have like a partner bank, the anchor bank, where the account is being opened and can open accounts on Fi Money itself or maybe on the Freo itself, right? Anuj can do that. How do we see that playing out? Because there is already a paper, there's already some kind of proposals coming out. There's something that is potentially happening on this side, right? At that point, do we see that friends become foes? Is that something that might happen in this partnership construct over here?
I'll take that one.
Yes, Sujit. Yeah.
I don't think so. I think the market is large enough. Let's look at an example of payment banks, for instance, right? And payment banks had a cap, that they couldn't accept money beyond 1 lakh rupees, or they couldn't offer a certain type of products, and they worked in partnership with others, for instance. For any new entity entering the market, right, you'd still need, for instance, a range of services which are, better provided by, perhaps a partner bank that you could actually work with, right? So that's one dimension, to say that we don't have to use the existing playbooks that we've seen of it just being pure competition. It can be, you'll compete in certain places, and uh, it'll be co-optation in certain places, for instance, right? Like, for instance, if I give you an analogy, for instance, uh, Google has Android, Samsung has Tizen, but Samsung still does phones with Android, right? Google has phones of its own, Samsung has phones of its own. It coexists in some form or manner, for instance, right? Why can't some of those, why can't we take lessons from the world of technology, for instance, where, there is an interesting uh, way to adapt or align business goals, functions for you to be able to work through. I Now, the point in terms of licenses, great move by Niti Aayog of actually putting a thought out there, a thought paper saying that, is this something that we should look at into the future? Uh, it may happen in the near term, but I would suspect that there's something, changes like this, dramatic changes like this from a regulatory or policy front, for instance, invariably take fair amount of time, because there's a lot of thinking which has to be done from a regulatory perspective, whether it's about priority sector lending, branches, different dimensions, for instance, of what will be permitted, what will not. But to a larger extent, coming to your primary question, I see an interesting space where in certain areas and categories, there would be competition. And in certain spaces, for instance, there would be co-optation actually happening.
But if I were to look at very specifically, Sujit, on the core of it, right, on the core of a neobank, once you get into from whichever wedge into banking, is going to be that bank account, right? That's the core. That's what you're building around eventually, right? And I think as of right now, given the regulatory construct, that is shared with your partner bank, right? You could partner with all of these banks on different elements. Maybe with we've already seen Google Pay partnering on the fixed deposit specifically with the bank, so that I can understand, right? But what is the thinking around your core of your product, which is the bank account? Once you get a license, would you still be giving your customers the option that, okay, you can get like a federal bank account, or you can get a Fi money bank account itself? Would you want to be doing that, or would you then want to kind of make it specific that, okay, I have my Fi money bank accounts now, that's all that I'm going to be offering, and I'll partner with my other players in the ecosystem for specific needs?
Yeah, you could, right? Like, there's multiple examples, right? Credit cards are an interesting space. The number of banks, for instance, that have partnered with other banks to issue credit cards exist, and one would think that lending is your prime revenue generator, and you've decided to partner, right? The bank that we partner with, Federal, for the longest time used to partner with an SBI, um, for instance, to issue cards. So I think that would continue. You'd give consumers the choice. The underlying question is about two things, right? Data, access, and revenue. If you can solve for these three things, I think newer models can emerge. And Shashank, to your point, for instance, if you're looking at a bank account as a walled garden, the reason why we've got accustomed to thinking about it as a walled garden is because there's history. There is history of payments, there is history of beneficiaries that you've actually listed. I suspect in the next few years, that's all going to vanish, right? The challenge may actually be that you may give account aggregator access inside GPay or PhonePay, and a bank account is just yet another thing which facilitates a payment, for instance. Could be interesting, right? Today there's a lot of inertia.
Yeah.
There's inertia because you've linked a bank account to your salary account and things like that. People don't see a need to switch. All of that, I suspect, could change. That could be the next big wave of where we could see dramatic change happening.
And Shashank, I think the point on partnerships, lending has evolved in that way, right? Fintechs already partner with banks. They partner with NBFCs. NBFCs partner with banks. So just give an example of Federal and SBI. RBL works with Bajaj on the credit card business. There's learning to be done there, and there's learning to be figured out that while I have my own license, but I also work with other partners. So how do they coexist? Um, and once the digital licensing regime sort of comes across, and after this white paper, and there'll be some discussions, etc., etc., there is enough learning that can be picked up from what's happening in the other financial verticals, which can be plugged into the banking side. And it's not a winner take all. Today, also, I'm pretty sure Sujith might corroborate this. It's not that he's got most of the people opening a bank account for the first time. Maybe some new guys are coming in, but it's I have like a 5 lakh rupee balance. Maybe I'll put 2 lakhs here and 3 lakhs here, and depending on what gives me more better value, I will keep maybe moving it up or down. So it's not. I mean, we have 800 million bank accounts thanks to Jan Dhan Yojana and whatever else. But it's not about this is not fight about saying that it's me or nobody else. And that's where I think the thought will be of how the regulator will also look at it.
Got it. And the last question, I think, for this discussion today, Rajeev, I'm going to go back to you with the same question, right? I think what we've been discussing.
Sure.
You've talked about how there's a particular way of thinking that's there in the banks right now, right? There's a lot about accounts, balances, PAT. Those are the metrics that banks are being measured on. And while the world might shift, as maybe Sujith is saying, and also have been talking about, where the bank gets defederated, right? The bank account itself, is what gets defederated and everything. But the metrics for you will still remain those, right? How do you look at this, where if, let's say, the license kind of comes out for you, in the market, how do you see your partnerships kind of evolving in that sense then?
Yeah. So look, I think all of us are on a learning curve, and I think today I don't think it's easy to say this is not going to happen or this is going to happen. I mean, I also see a possibility that Sujith, Anuj get digital licenses and leverage the branch network of people like us to provide cash and check rather than trying to build it themselves, because that will complete their offerings. I think ultimately we are all going to play on what is our business strategy, where are we investing our resources, have we learned from a very different environment over the last 5 years and the next 5-10 years, where customer actually has the power to, and I repeat, customer has the power to bundle and unbundle and rebundle, and where are you going to put your resources? I think the biggest thing for banks today, and I think this is because we've lived on a supply-starved world for 25 years, at least for the Gen Z and the HNIs and all. How does the internal economics and cost structures become more flexible? So, in our bank, about a year ago, we started measuring unit economics at a customer level. And then we started looking at customer lifetime value and CAC and churn. I mean, these are not things which banks are traditionally growing up with, because they've always lived in a world where you build it, people will come, at least till 5-8 years. So I think a lot of focus has to be, where do we deploy our resources? We will continue partnering as RBL, because we don't believe that, at least at our size and our mindset, that this is going to be, the big banks will take it or the big fintechs will take it. I think you'll have to figure out where you want to play your role. And in our bank, we call it full stack or near full stack and partner stack. So almost our business is equally divided. And I think this is important. And I think we haven't even touched the Bharat side of it, which is the other 500-700 million, where you cannot really go and do a total digital strategy or a total physical strategy. I would love to partner with a Flipkart or a Meesho or some supply chain biggie to actually do my business there rather than doing it myself. We do a lot of Bharat business, but so I think this is going to be playing out over a period of time. It is not that you have a North Star that I have to be 5,000 branches or I have to be 5 million customers in Sujith or Anuj's metrics. I think you'll have to figure out how do you deploy and redeploy your resources around your core strategy, assuming you get your user experience, segmentation, and technology better and better. I mean, there's nothing right about it. And I think that's the way we are playing it. We are saying we will not get rid of the metrics of measurement for us for any time soon. And hopefully Sujith and Anuj will start getting measured somewhere closer to what we can measure today. Maybe 5 years from now, when they build a banking book where then people say price to book instead of price to GMV. But that is just a matter of time. But what goes behind it is super important. And it's about talent. It's about the way you organize yourself, the way you understand customers. And to me, each of us has a journey mapped out. Some of us can do all of it. We certainly can't do all of it ourselves. So which is why we look to people like you to help us learn, and then we are happy to partner and co-create and share the revenues, because we don't really think we are deserving of doing everything ourselves.
Thanks a lot for that. And with that note, I'm going to wrap up this panel discussion. I think there's been a lot of insights around segment of one thinking, the journey in terms of how we will kind of build for these segments, and a view of how banks are looking at this. I think thanks a lot for being very candid with your views on all of this. I think it's been an exciting session. With that, I'll hand it over back to the team. Yeah.
All right, I think I'm back on stage. Thank you so much, guys, for your valuable time. It's a very incisive and comprehensive look at the future of neobanking. Although I must say, the final word on neobanking will probably be taken when the new Matrix movie releases and we can find out what Neo has been up to all of these years. But enough of my nonsense. I think our next panel is ready to start soon. Our next panel is on embedded finance, and we'll start, I think, in just a minute. So thank you guys so much. See you in the next session.